So I took a buy. I took a buy from a breaker, the same concept that I use every day. So what happened is price had been dropping from 930, and then price dropped into, this is 11th, July 11th NWOG. So this price consolidated here and created some equal lows before sweeping deep into the NWOG. And then these three candles here, let me mark them properly. These four candles, 1, 2, 3, 4, the bullish candle, I marked them as my last up close candle before this liquidity sweep, as I have written here. So I was just waiting for price to close above the breaker, and then I took a buy here. This is where I took my buy, and then price has been riding nice, as you can see. So the most important thing is to find something that works for you, and then do it over and over again until it is something that you'll be using all the time. You can see I'm targeting 930 highs, but I'm supposed to take some profits here, 70% of my trade. That is where I want to take some of my profits. So I believe I've shown you guys, I've been trading breakers over and over, repeating the same thing over and over again, and that is what I used to frame this trade here, as you can see. So I was on the stream, and I've seen everything that Macaulay has done, and it makes me feel good because I've walked this journey with him, and I have seen him grow to where he is now, and that is a good thing. And the fact that he's giving that knowledge to you all for free is something that he is also growing. As he's doing that, he's also growing, because during my time when I was mentoring them, I did it for free. He can confirm that I mentored them for free, and in the process I was also growing while doing that. So sometimes you have to give back to the society and grow, and someone will always pass it forward when you do it. So my trade is purely based on this breaker block inside the NWOG, and this being my price leg. You can see, let me show you. Remember last time when I taught you about dealing range, and I told you when you mark where you are targeting your profit, let me show you. Your breaker should form on the discount side if you're buying. Now this is my target here. So from here to where price started turning, you can see my breaker has formed on the discount side of the market. So this is a high probability breaker. The fact that there's a few things. There's a liquidity sweep here inside the macro, and then the breaker has led to a liquidity sweep, and then the other thing is it's inside a higher time frame event. Like in this case, it's an NWOG. This is a new week opening gap for 11th. Let me first do something here. So this is the NWOG that formed on 11th of July this month, and you can see price has referred to it due to the fact that it had been left open. So two characteristics of this breaker have already been formed. That's a liquidity sweep into a higher time frame PDRA, and then close above it. The most ideal entry would have been on this. There's a small fair value gap here, so that is another characteristic that has fulfilled. And then the most important characteristic is, when is that order block forming? Like for example, in mine, it has formed during New York time and inside a macro. So it has formed between 950 and 1010. You can see the whole breaker has formed 950 and 1010. That is when even the entry has presented itself. So this is a high probability breaker for me, and it's also happened after 930 manipulation. So my initial stop loss was here, just below the breaker in the opening. Below the breaker here. This is where my initial stop loss was. So I've just moved it right now when I've taken some profits off, and I have to take it above break even to protect my position of the profits that I've already taken. So you can do this over and over again. And then when you're buying, for example, in this case, any bearish PDRA like this fair value gap, like this fair value gap that I've marked here, it should become an inversion fair value gap like that. So any bearish PDRA should be violated the way you're seeing price do here, and they become inversion PDRA. This is an indication that your price will actually continue buying. In fact, I might move this position to London highs up here, because these London highs have been left. So I am thinking greedy. I'm content with what I'll get here today, being a Friday. If there will be a continuation in the PM session, I might take the trade. But so far so good. The breaker is high probability. And then if you look at maybe something like 4 hour, there's a 4 hour bearish fair value gap here. There's another one on the premium side. So even if the market wants to sell more, even if this market wants to sell more, if you take this to where the market is standing, at least it should come to at least 50% of this dealing range, which is above here, above the 4 hour fair value gap, maybe into this higher one before continuing to sell more. So that is how you use all those things that I taught you, that I showed you, the dealing range and all those other things to frame your setup. And the signatures that should support, for example, I marked this fair value gap. You can see it's supporting price higher. This inversion fair value gap should support price. The fact that price is weakening and closing above 50%, it showed even if price retraces down, this fair value gap will be inverted later to push price up. So somebody is asking, why did yesterday breaker fail? Which breaker? Yesterday AM session, which breaker failed? And did you align your breaker with the higher time frame PDRA? Governor is asking why yesterday's breaker failed. You cannot just pick any breaker. Go back to your charts, or you can show me which breaker you're talking about. We can go through it and we'll see if it met all the conditions to become a high probability breaker before you took that trade and it failed. And if it failed, obviously it showed that there was something missing in that breaker. Maybe it wasn't a high probability breaker. So there must be something, because the market is not always wrong. The market is never wrong. You're the one who is wrong. There's something you were saying yesterday. That is what he's saying. Oh, I remember. So I can't remember where we were unless you guys take me back to what I was referring to. But I remember well. I wanted to talk about why a certain breaker failed, and the reason must be in one of the reasons I've just given you now. Because what I wanted to tell you was what are the high characteristics of a high probability breaker, and I've already told you a high probability breaker occurs after a clear market structure shift, usually on higher time frame level, and then another thing, it occurs after a liquidity sweep before breaking of structure. So this is a liquidity sweep before breaking of structure above this swing high. So this is a high probability breaker, and this liquidity sweep must lead or enter into a higher time frame PDRA. In my case, it's an NWOG. I don't know. I've been having this NWOG on my charts for a long time, so I don't know what other PDRA is on the left side. And then the other thing is, if you're selling, your higher probability breaker should be on the premium side. If you're buying, your high probability breaker should be on the discount side. And it's the same thing I've done here with the dealing range. You can see I was buying, and so my high probability breaker has formed on the discount side of this dealing range. If you are selling, your breaker should be on the premium side of the dealing range. So that is another characteristic. And then ideally, and this is something I've been observing, your breaker should overlap with a higher time frame order block or fair value gap or a gap. For example, you can see this breaker is forming inside the NWOG. NWOG is a very big gap. It's a weekly gap, so it's a big deal in the market. So the breaker is overlapping inside a higher time frame gap, in this case, which is an NWOG. It can be inside an order block or previous day, week, month highs and lows. So that is another characteristic of a high probability order block. So when you have those characteristics, you can always have red flags. Like if those characteristics are not met, that is a red flag that your breaker is going to fail. For example, some people will be looking for breakers in a consolidation. If the market, let's say for example, like this type of consolidation here, someone will be looking for a breaker inside the consolidation. So your breaker cannot form inside the consolidation. It must form when price is making moves. So one of the red flags that I usually consider that this breaker is not high probability is if it's forming inside a range or a consolidation. And then another thing, if there is no such displacement like this away from the breaker, that is another red flag in that breaker. So once your breaker formed, your price should not stall here, consolidating around here. Price should run away from the breaker. And what I usually find the price doing is it will do something like this and then consolidate here, then later fall back into the breaker. Something that like that has always been happening. Maybe it's even what wants to happen here, and then continue buying. So that is something I've observed from my journals over and over again. Market will move away from the breaker aggressively, the way it has done here, and then after moving for some time, it will drop sharply into the breaker. Now, when it drops back into the breaker, it should leave the breaker immediately. So even me trailing this stop loss is risking that break, but I don't mind because I can always take a re-entry from here because it's something I've observed price doing. So another red flag is if your breaker forms and the market stalls here, like in consolidation like this, most probably you're going to be cooked by that market. So your breaker should really push price immediately, the way this one has happened here. So this one for me is a high probability breaker. And even if this price comes and takes me out, I might make a re-entry going back into my initial target up there. So, and then another thing is if there is no liquidity on higher time frame PDRA, that can be another red flag in your market when you're using a breaker. For example, I've seen Shadi has shown you NQ and ES taking higher time frame liquidity, and the breakers have formed after those liquidities have been taken. So those are high probability breakers because they are forming after liquidity sweep, or not necessarily liquidity sweep, or market entry into a higher time frame PDRA, the way this one has entered into an NWOG, something like that. And then if your breaker doesn't align with your higher time frame bias, that is another red flag also, because it should align with your higher time frame bias. So that is another thing. Your breaker should align with your higher time frame bias. Another thing, for people who see breakers everywhere, you should not see tiny breakers in the middle of lower time frame. So if you're on 1 minute and then you see everything as a breaker, not a clear one like this, if you look at this price action here, there's no other indication of a breaker here. So if you see some tiny breakers everywhere, that one is a red flag in that market for low probability breakers. So you can choose one thing and stick to it and be learning from it, be it a breaker, a fair value gap, because this is also 2022 model. Price swept liquidity sweep. This is the swing high here. Let me remove this. So this is a swing, this one here. You can see this is a swing. So price swept liquidity into an NWOG and then closed above the swing high, you can see, and then formed a fair value gap, retraced into the fair value gap, and market is now buying. So this is also something else. You can always use 2022 mentorship without even using breaker, but I've always found that fair value gaps that align with order blocks or breakers, they usually become very high probability. They usually become very high probability. So I usually look for, there is a fair value gap here, yes. So is there an order block like this one that pushed price down to sweep this? Yes, there is an order block. So for me, even this fair value gap is high probability of this due to the fact that there is an order block that pushed price down here before we started buying, and this signified market reversal here. So that is the entry model that I use, and I use the same thing over and over and over again. I usually don't use anything else. So unless anyone has a question. my entry is based on price hitting a higher time frame PDRA, which is this new week opening gap that formed on 11th. So a little bit of consolidation happened here, and then market looked like it was buying and then pushed price deep into the NWAG. So these candles, the ones that I've marked here, the green ones, these ones, they are an order block that pushed price, sweeping these lows they created on the left side, these ones. I'm referring to this, let me show you. I'm referring to this candle, 1, 2, 3, 4, the whole of this series of candles here. This is what I'm referring to as my order block. These ones, those ones, the ones in the dark here, those are what I'm referring to as order block, because they are the last series of up close candle before price pushed down deep and sweeping these lows it has formed here on the left. So this is what I've marked. Let me show you that one, those 4 candles, these ones, these 4 green candles, they are the last up close candle before price swept these lows on the left deep into the NWAG. So this is what happens when your price is here. You wait for your order block to be violated, the ones you marked as an order block. And that is why I always say order blocks, breakers are failed order blocks, because ideally this is what should happen. This is an order block, so market should come back here, and then the order block should continue to push price down like that. But then when an order block is violated like this, the way it has happened here, now it's like an inverted order block, which is now a breaker. It's a failed order block. It's an order block that has failed to serve its purpose, pushing price down. Instead, it's now inverted into pushing price up. So that is what we call a breaker. For some people, like ICT has always thought, a breaker for him is a pattern which will start with a high, a low, and a higher high. So for ICT, a breaker looks like this: a high, this high here, a low, and a higher high, and then retracement into the breaker. And I think that is what is happening here. Price wants to retrace back into the breaker before buying more. But for me, I chose the specific candles because he has also shown the specific candles that form the breaker. They are the last up close candle in a buy market and last down close candle in a sell market. So that is the entry. When the order block fails and it is violated, you now use it to enter the market and into the nearest PDRA. For example, this high or this fair value gap would have been an ideal entry for this buy. But then these are also liquidities that are up here, which the market might go to later on during the day. So that is the entry model that I have used. Can you still use the breaker on PM session if it won't be tapped? Let me kindly I've pointed to the candle. What time do you start framing the trade and entry time? I usually come back to the market at around 8:40. So because I'm usually not interested, if this fair value gap is violated, I might exit the position and wait for the market down here for me to enter more buys, like the way it's happening now. So because this fair value gap supported price here, and I know the market is coming back here, you can exit whenever you see your PDRAs being violated. But since I have taken profits off and I've trailed my stop, I have no problem with being stopped out. So the person that is asking what time do you start framing the trade and entry time? I usually come to the market at around 8:30, and then I have to look at 4-hour time frame, like what is the market doing on 4-hour time frame. For example, in this case, when I came into the market, this is the candle that was playing, the 4-hour candle, and I was waiting for it to close the way it has done here. So once it does that, what do? You come and mark the PDRAs that are inside here. For example, I have marked this 4-hour fair value gap. This is another 4-hour fair value gap. So I'm expecting a retracement, and this 4-hour fair value gap aligns with this order block here. So I'm expecting price to retrace back into this 4-hour time frame. The most important thing in the market is to know where is your liquidity, where is the market going to. Your entries should not be a problem, but knowing where the market is going is the most important thing in the market. Once you know that, you can now start framing your entries without being afraid that the market is going to take you out, because even the market can take you out like twice before you get an entry right. But is the direction you're trying to enter the market to targeting, is it the right direction? So the most important thing is knowing the next 4-hour candle is going to retrace into this gap here, the 4-hour fair value gap. So all you have to do is wait for an open, the way you see here. You have to wait for an open, manipulation, and then price starts buying, and you have to frame your trade down here. So that is the most important thing. Entries do not matter. As long as the market does, as long as you know where the market is going, entries do not really matter. That is the most important thing. So the next question, someone is asking me, so I start from 4 hours and then I drop to 15 minutes. My targets are usually based on 15-minute time frame. That is because I'm trading on 1 minute. I usually have my targets on 15 minutes. For example, these are smooth highs here. This is a, and there is a 4-hour fair value gap, but in 15 minutes these are gaps. So these are very smooth target here on 15 minutes, and then I use 1 minute to frame my entry so that I can get stop losses that favor me. Some people cannot trade on 1 minute time frame, and it's understandable because most people consider 1 minute time frame as noise. But then once you expose yourself enough to the charts and videos, especially 2023 and 2024 mentorship, you will understand that market is fractal. What happens on daily, 4 hour, 1 hour, 30 minutes, all the way to even 15 seconds, it's the same thing. If there's a fair value gap on 4 hour, there's a fair value gap on 15 seconds and all those time frames. So you must trickle down from 4 hours, 1 hour, you go on marking the PDRs. But then most PDRs I mark on higher time frame, and then my targets are based on 15 minutes because I consider myself a scalper. How many macros do you trade? I only trade 2 macros or 1. Like if I've traded this macro, unless I'm trading continuation, and this is, and now this is, as you can see, this is 1050 macro here. I was trading a continuation and this breaker was not here, I would consider buying more from here. But then since I'm not interested, I'm waiting for the market to come back into this breaker, I will wait for it down here. And another important thing, but this one I want you guys to go, people who trade macros, I want you to go and backtest and forward test them by yourself. The called macro manipulation. So what happens if your macro, like for example, you can see this is 950 macro. So I've always observed that if you are on buys, market always manipulates below the macro before buying more. So as you can see here, market created some form of liquidity and then manipulated below the macro before buying. Now look at this. We are on a manipulate below the macro before we buy more. I don't know what has happened. You can see market is already starting to manipulate before the below the macro before we buy more. So I've always observed that macro manipulation happens, and that is something that is you can backtest on your own, come up with your own data and see if that happens. Can you still use the breaker on PM session if it won't be tapped now? In fact, you will find in most cases during PM session, market will refer to the breaker or the PDRs you used on the AM session, like first presented fair value gap, such a breaker like this one that I have marked here. On during PM session, if let's say lunch lows, the lunch hour range forms around here, and you are buying, we said if you're buying, the lunch lows should be taken first, and then you buy towards lunch highs. You might find that these lunch lows being taken, price might manipulate all the way to the AM session breaker and then form another setup like this one inside this breaker before you buy. So you can use the PDRs you used on AM session to frame to frame buys again. And market sometimes refers to those PDRS that you used on the AM session. In a PM session trade on Friday, if the lunch high is taken late, do you take the trade targeting lunch lows, or do you assume that the market is returning to 30% of the candles? It will depend. For example, you cannot just enter the market blindly just like that. If lunch, but it all depends with where was your target during the AM session. Has it been hit? Has it been hit? Let's say, for example, you are targeting these highs here, this one, this 930 high, and then this market consolidates here. Even the lunch hour happens around here. Let's say this is lunch hour range here. So the market did not hit your higher time, your earlier target, the liquidity that you are targeting. So when there is consolidation here and lunch lows gets taken, and my AM session targets were not met, I'll be comfortable taking this trade towards my original target during the AM session. So yes, you can still buy more on Friday while still expecting a TGIF if liquidity was not met up here, and that liquidity is high probability. So you can do that. Do you factor in time? The most important thing is time. Before you even start thinking about price, the most important thing is time. I cannot trade, and that is why I cannot trade before New York session is here. So time is the most important factor. Does it mean that breakers don't have to be retested? Personally, I was waiting for the retest, but the retest is happening now, and it has happened. This is a retest of the breaker, so you can buy this market more if you are interested. So, and I have just explained that the market does something like this, consolidates here, and then back into the breaker. But for someone else, someone like me, let me show you. This close here and this candle touching the breaker, having a very small fair value, is reason enough for me to take trade. But then this is now the retest of the breaker. So I can comfortably, and you can see there is a fair value gap inside the breaker, this one. So I can comfortably wait for price to hit the breaker, and then you buy more. In fact, during my early years, I would wait for something like this and only target these new highs that have formed here and exit the market. So this is now the retest of the breaker. Austin is asking, does it mean the breaker doesn't have to be retested? It will always be retested no matter where the price go. Even if this price leg hung all the way to up here, it would still have retested this breaker the way it has done right now. Take us through PM session. When do you look and the macros time that you execute a trade? I don't know if I took a trade yesterday on PM session. I'm not sure. Let me see. But then during PM session, I explained what you look at. For example, let me go to 5 minutes. Let us look at Thursday, yesterday's PM session. If you look at this price action here, where is the lunch hour? Let us mark the lunch hour. This is I explain what I have done. Now this is a PM session trade. No, this one is not clear enough. Let me just go back to the charts. This one is not showing me what I want. So I'm looking for a PM session trade over here. Don't know if I'll find one. So this is noon to 1:30 exactly. Let us use this price action here. So if you look at here, this is noon. This is noon starts there, and then 1:30. ICT says that PM session trade usually runs from noon to 1:30. So if you look at this trade here, and you want to trade the PM session, so what you do is you mark the lunch highs and lows. For example, this is the lunch high here, and then this is the lunch low on this candle here. Let me exit this. This is the lunch low here. I don't know how many pip range is this. It's too small, but then it's just an example I'm showing. If you look at after 2 p.m. is here. So what happened at 2 is market came and took out the lunch highs, and then there is a setup here, sold to the lunch lows and maybe targeting these liquidities down here, as you can see happened here. And this is something I want you to test. Go to your PM session, mark every lunch high and low between noon to 1:30 that happened, and then observe if price swept one side before dropping down to the other side. And especially, you align it with your higher time frame bias. If you're buying, let's say you are buying, you are selling this, the market will consolidate and then sweep. If this is the lunch hour liquidity and you are selling date, in a perfect market, it will sweep the highs of the lunch before dropping or continue to sell. I look at PM session, and it must align with the higher time frame bias, especially after 2. Look for trades after 2 p.m. That is when you will find the most high probability trade, when you're trading the PM session using higher time frame bias. If you're buying, you should use the higher time frame bias to buy the market, to continue buying during lunch hour. So next question, what things should happen for you to trade during London session? I don't trade London session, but if you want to trade London session, come to Asian session. For example, Asian starts at this is Asian session. Let me mark for, I don't know what's happening with my internet nowadays. It's loading. But come and mark midnight. If you are looking to trade Asian session, come and mark. What's happening? I don't know what's happening with my internet, guys. Okay, it's here now. If you're looking to trade Asian, you usually come and mark midnight like this, and then to 7. This is the Asian session here. So what I usually do is I mark the Asian highs, 7 to midnight. That is the Asian highs, and then mark the Asian lows here. If you want to trade London session on a bearish day like today, normally what should happen is London session should take Asian high, and then you will find something like this, which has a fair value gap for you to now sell the market. So you look for a sell setup, and if you are bullish, Asian low should be taken, and then you look for a buy setup. But I don't trade London session. I've always been wrecked every time I want to trade Asian session. I don't know what happens, but I'm always wrecked. Say something about what about time in and out? I don't understand trader cheats, what you're saying. What about time in and out? I don't understand what you mean by time in and out. Say something about 10 a.m. candle. So I usually trade the 10 a.m. candle, and this is what happens. I'll come to 4 hours like this, and then I'll look at what the market has been doing. For example, if you look at this, our case here. So in your candle, this is the last candle before we start the 10 candle. Now, if you look at what I did here is, let me delete everything. Once this candle closed, the first thing I did is I marked this 4-hour fair value gap here, and then I looked at what has this price leg done. So all this liquidity has been swept into half of this week, this 4-hour week here. You can see into this week. and we said wicks are gaps. If you drop to lower time frame, this is there's a whole gap here. So I am anticipating this fair value gap to be filled on 4 hours. So I will now drop to lower time frame, like 15 minutes, and maybe observe what's happening. But most importantly, 1 minute. And the 10 candles started here. The 10 candles started there. You can see this is where the 10 candles started. So there's liquidity here on the left, this lows here. And I had marked, once the 10 candle sweeps this liquidity, this is my order block. It's the same thing I'm repeating over and over again. So open of the 10 candle, you can see the open is here. Manipulation as expected, close above the 4 consecutive candles that were my order block. And then once close above, I took a trade from around here. So the 10 a.m. candle, you first identify the higher time frame buyers, and then are there gaps left? For example, in today's trade, we have traded the opposite direction because of filling of a gap. So we've done filling of a gap, not aligned with the higher time frame buyers, but because there's a 4-hour fair value gap, which really should not be left, that is why we took a buy like this, the one we've taken here. So this is the open of the 4-hour candle. Manipulation taking this sell side liquidity into the new week opening gaps that I had marked here. And when market closed above, that is why I was comfortable taking this buy, this one. I was comfortable taking this buy. And if this breaker still holds price, I would be comfortable taking another entry. But for me, once noon is here, I don't take trades again. I wait for PM session to play out before I decide to take a trade again. So whether you look at price on the higher time frame, on what time frame, your entry model should be the same. How do you use? How do I use the least stop loss possible? Because I realized it's affecting my RR. So the thing is, you cannot be perfect in placing stop losses. For example, when I took my trade here, my initial stop loss was here. This is an order block, so it was below the mean threshold of this order block. And according to the stop loss that I use, this is more than $2,000. But then again, if my stop loss is here and my entry is here, if you look at the RR from here, if I get at least 1:3, you can see this is 3 RR. I'm comfortable with that because this is where I took most of my partials, and then the other ones I took here. So this is something that is comfortable. You cannot have stop loss in the market. Setup is okay. Even having a stop loss down here is perfect, as long as your model has played out and you know that the likeliness of the market going back to your stop loss is close to 0. For example, if I had taken my trade here, and I have my stop loss somewhere here, like that, my whole setup is banked on this breaker block here, this one. That is where my whole setup is banked on. So if I took a trade and this market did something like this, that means this breaker has been violated back into being an order block. I am even comfortable exiting this market here before it hits my stop loss until the market comes again above my breaker, and now I can take another trade. So it's not a matter of you having a tight stop loss. You can enter from here and your stop loss is here, but as long as your breaker holds price, you are okay. If it gets violated and there is no PDRA down here, for example, if I was to exit, I would look at this candle. You see this one? So I can assume market is coming to half of this order block, and then it will go back to above the breaker. But then if something like this happens, the market comes here or below the order block like that, or below the half and closes there while strongly bearish, I am comfortable exiting this market even before it comes to my stop loss. So you have to know, when is the market giving you what you expect. I can even enter the market here and have my stop loss here, but as long as my breaker is being violated, that is not a high probability market, and I will cut my losses and accept, because accepting losses is also part of the game. And that is why I had my stop loss here initially, because I know if price closes down here, this breaker is not high probability anymore. I have to wait and see what the market is giving me anymore. How was your risk interview with Alpha? Alpha banned me. I requested 68K from them, and they came up with flimsy excuses that I was doing group trading. I trade alone, solo. I don't even have a Telegram, WhatsApp, or any other thing, or someone we share signals with. So, but the risk interview, they'll tell you to open a trade, and they want to assess how you place your, and the first thing, start with placing a stop loss. Otherwise, they'll say, oh, you cannot take profit before you do a stop loss. They do those kind of things, but for me, they banned me. Is there a macro for the PM session? Yes. 150 to 10, 250 to 310, and then 350. The last hour macro, I think it runs from 345 or something. ICT said something like that. How do you know the daily target has been reached during PM session? So this is what I'm saying. Let us assume, I'm not sure. Let us assume this is your target here, and a higher time frame PDRA has been hit the way it has happened here, and you have taken your trade here, and then the market buys, takes out this low, and then
I think we are having a matrix attack. Just tell me if you can hear me as we wait for Thanos to come back.
I think the sound is me not talking, but I think I'm busy. Can you hear me now? I don't know what's happening, guys. So there's no sound. See, what about now? Someone had asked me if reached. So what I am saying is, if this is your target up here, I think the sound is. If this is your target up here, Let me see. If your target is up here
All right, it's another matrix attack. Let's see how this goes. Okay, let's just wait. We can have some music as we wait for him to probably join.
Nobody can give you love I have for lifetime. Nitang'ang'ana na kama na kama bado time nitakazana, yeah. Nitapambana na kama bado time nita pull over, yeah. Just hold me tight, I move you right. Nita feel so nice. Move your body, niko na money I will spend on you. Fight nita fight kama kuna msana waste time. Take off your clothes, let's do it for the love. Song get your close and feel my walk. No cook from walk the door. Give me fucking a play like a dance. Say nobody, baby, let me turn the lights off.
So what I'm saying is, if your target is up here and market has done something like this, and then lunch hour consolidates around here. For the person who asked me, how do you know your daily target has been met? So if this liquidity has not been met by 12 and lunch hour has consolidated, you cannot look to sell this market. What you'll do is you'll wait for market to sweep. You'll wait for lunch hour to play until around 2 p.m. Wait for the market to sweep one side, maybe into a PDRA, like this order block here. So something like this will happen. And then you will now take your buy going back to your target, because the market has already shown you that it was coming to sweep this liquidity, but then the objective was not met by the time lunch hour was playing. So during the PM session, you will now complete this objective. And in most cases, at 2 p.m., during the PM session, when the objective I was aiming for has been met, I usually don't take a trade, or I'll just trade this range here, wait for lunch lows to be taken, then trade to the lunch highs, na nifunge siku hivyo, and then I close my day like that. So that is how you know your objective for the day has been met. If it has not been met, you can trade it during the PM session. And sometimes a day like today, even being on Friday, the market can even close your objective, and you have to wait. You have to wait next week. So if one macro fails, do you wait for the next one, or you're supposed to have enough for the day? So this is what happens with the macros. When one macro consolidates like this, let us assume this is a macro. If this macro consolidates, let's say 1050 to 950 to 1010, if it consolidates, most likely the other macro will expand towards what you're aiming for as your target. I've always observed something like that. When one macro consolidates, let us look at what's happening now. So 950 macro expanded, and look at what is happening on today's 1050 macro. It's basically consolidating. So this market might stay here, consolidate here until the next macro, which is 1150. This one. That is when maybe the market will now start expanding. And this is something you can observe if this chart is going to like stay here. This macro is consolidating. This macro expanded. This macro is consolidating. The next one might, maybe there might be even equal lows in the macro consolidation, then sweep deep into the breaker and this fair value gap, and then that macro will now expand. So when one macro consolidates, the other macro usually expands. So yes, one macro can consolidate and the other one expands. Someone is asking me, how do you journal your trades and emotions? The most effective journaling that I have done is when the trade is in play. Like for example, when we started this chart, you saw I had journaled here. I was writing what I'm doing and how I've taken my trade and those kind of things. Let me show you something. If you look at, I have something here I want you to look at. If you look at this, let me open these two charts. If you look at this chart, this is a trade I was taking on this particular day, and you can see this is what I was journaling. Market swept all-time high liquidity, and I expect a form of reversal. I marked the 5-minute order block, turned breaker. Also, ES failed to sweep all-time high, creating an SMT. And then you can see here I'm writing, I'm feeling relaxed because rules have been followed. And I believe this trade played out. This trade played out. And now I transferred that to here. You can see this is my trading journal. This was the second trade of 200, 24th. This was on 24th. Time taken was at 4:10. So this is New York session. The pair is NASDAQ, sell, and all those kind of things. And then, but I later eliminated this entry and stop loss stuff. So you can see, taken according to plan, explain. Now, what went well? When it gets to this point, I'll come back to my chart here. I'll come back to my chart and observe what I wrote, how I was feeling during the trade. And then that is what I'll now come and transfer here. And you can see the trade went well and I got stopped out on a trailed stop loss. Time factor, what to improve, time factor watch, market was about to close. You see, pre-trade feeling, calm, emotionally detached due to partial and risk off factor. During trade, I was patient. After result, relaxed, but I knew the problem was time. Notes on feeling. Since trade was well risk, I did not feel emotionally disturbed. Lesson learned, I should stick to taking trades only during New York kill zone. So you can see the most effective journaling that I did is, I journal when the trade is playing so that I can be able to transfer how I was feeling during this trade into, and this only happens when I'm testing the model, into let's say, let's do another one like this one. You can see I have written what was going on, and then the market played well, trade played successfully, and then I came to my journal and I transferred, this is test 9. I transferred the whole thing into the trade that I was taking during that time. So the most effective journaling for me is when the market is playing, because I'll be able to record my emotions. How do I feel at that particular time? What are the emotions? If I see market retracing, for example, in this, and I am not sure where the market is going, I told you this market is coming back to the breaker. So if I see this retracement, how is it making me feel? I'll write it down here, and then I'll later transfer it to my journal. So I find journaling while trading as the most effective thing I've done of late. Until when will you invalidate your bias? I'll invalidate when this breaker gets invalidated. So the entry model that I'm using is I'm banking everything on this breaker. Once it gets violated and this low gets taken out, I am out of the market, and I am not interested on what the market is going to do again until it gives me another breaker or comes back to refer to this and then uses it to support price. So I usually invalidate my bias when my PDRs, the PDRs that I expect to support price, like this breaker, they are not respected. So that one, you cut the trade and then you sit and watch and see what the market is going to give you next. Placement, assuming there was a fair value gap below your breaker, do you treat the fair value gap as a breakaway gap, or do you treat it as an invalidation of the breaker? if price comes back to it. There is one here. You can see there is a fair value gap here, and it had not been mitigated. But then, if I entered here, and this happens sometimes, if I entered the market here, and then it came down to fill this fair value gap, like this, the safest way for me to know that for sure this market is going is me waiting me out. Can place it here, but at this point, if the market was coming to fill this fair value gap, it would have stopped me out here. But because my trade was risked, I have no problem with that. The safest way for me to enter this market again is wait for it to come again above the breaker and then retest it, due to the fact that down here the market has already retraced into this fair value gaps. Why this market should come down here again after coming back on top of the breaker again. So I'll be comfortable taking another long here after the market has taken me out here, because it was coming to fill this fair value gap. Or if there is a fair value gap, a significant one, let's say like a big one like this one here, I will usually wait to see if price will come back to it, and then come and violate the order block again to become a breaker. But then if I was waiting for price to come here and then it does something like this, I have no problem taking a trade from this fair value gap, rather than taking a trade here and then it's stopping me out. Instead, I would have waited for a fair value gap to be taken out. But then another thing that I consider while trading this are inversion fair value gaps. If this is a BPR, if this was a sell side imbalance and a buy side imbalance on this side, I'll usually take my trade from here, because I don't expect price to drop back into the BPR. So sometimes you get stopped out here and price was coming to fill fair value gap, but I usually feel like the safest way to go back into the market is to come back above here and then retrace, and then I'll take my buy from there. There are some things you cannot prevent in the market, like being stopped out. Kuna DRT, internal liquidity, like unapima the range yenye imesweep. I don't understand what is that. Samuel, I don't understand. So I think we've discussed enough. I don't see any more questions, so we can call it a day. For me, if I'll re-enter this trade, but I'll wait to see what the macro will do. I'll take a trade on this. Again, I'll buy, but I will wait for the macro. This is the macro starting here. I've marked. I'll wait to see what the macro does before I buy again. So you can see this macro is already consolidating from 1050. 1050 has been in consolidation. 1050 to 1110. You can see it's making price consolidate. So I'm waiting for the next macro. If this breaker is not violated, I'm going to take another long to my original take profit. But as it stands now, my day has been profitable thanks to knowing how to take partials. As a trader, you should always pay yourself first before anything else. Based on your journal, what are the 3 hours? What are the mean threshold? 3 hours. What do you mean by 3 hours that the setup present itself? I usually trade from 10 to 12, 10 to 11:50, and then I stop for the lunch hour to play out. Limit orders. I enter the market direct. That is why I'm usually active during New York session. I'm seated in the charts observing what the market is doing, because I want to take trades by myself. I've already explained the macro. I don't know if you were here. I've said you can see during the macro is when price formed this setup and then expanded. This is the other macro which has made price consolidate. We are now going to this one. So this price is now expanding. If during 1050 macro the market comes back to this fair value gap, I'm going to take more longs into my original target. So that is how you using macros, because to chase this price, I cannot enter this market here, but the macro can help me. If it drops to somewhere here, I can take this trade here and even place my stop loss just below the mean, the half of the breaker here, and I'll be comfortable with that. So I think that is all for today, guys, and just find one model, use it over and over again, collect data, I have in my journal, I have thousands of journals that I have collected, and that is why I am able to know what the market is doing at specific time. So what you can do as a trader who is developing, just lock in, find one model, use it all over, like test it over and over and over again until you know how the market behaves. You remember when the market was here, when the market was here, I told you it's coming back to the breaker, and that is exactly what the market has done, and it's now buying towards. And I'm telling you, I might use the macro to enter this market again. So the reason why I told you this is because I have seen this. I have seen it a lot of times. So that is why I am able to know that the market wants to do this at a certain time. So just find that one model, repeat it over and over again until you can know what the market is doing at a particular time. And you don't have to like listen to people. You just concentrate on your model. You'll see me trading breakers. Maybe you trade the 2022 mentorship. Maybe your trades are only based on entering from a fair value gap. Don't copy what I'm doing. That model which you're using, use it all over again, and then you will grow discipline and everything out of that. And once you are confident with your model, you will not be swayed even by any other person when you see them trading and their model is playing out well, because you have tested yours and it's already working for you. So that is one thing that you should be able to know. So guys, I think that is all for today. You stick to your system, accept boredom in execution, journal your trades with brutal honesty. If you made a mistake, don't blame the market, don't blame the news, don't blame anything. Be very brutal when you are journaling. So that is all for today, guys.